Benjamin Graham said, to be an investor, you must believe in a better tomorrow. So with this in mind, it's great to have your company. I'm Jessica Amir, market strategist here with Moomoo. Today, we are diving into the 3 growth themes that are building a better tomorrow and could produce some of the strongest investment returns in markets next year and beyond. We're going to cover the stocks and ETFs that you need to know and be across. So why are the best investment returns probably going to come from the AI themes? AI chips and data centers, and the software to support AI and make it happen, and the resources needed to build the chips and data centers and to keep the energy on and to keep everything going 24/7. So why? Well, it's because generative AI spending is projected to surge from 390 billion up to 540 billion from this to next year. And it could scale as high as 3.4 trillion by 2033. For a more conservative estimate, for those of you out there like me, I like to call upon the Bloomberg Intelligence estimate that sees annual AI spending hitting 1.8 trillion by 2032. Basically, all this means is we could expect a compound annual growth rate of 37% up until 2032. But this is where it gets juicy. Next year, AI demand is expected to really broaden out, with AI expected to be found in industries that we haven't seen before. So we currently have, AI in tech businesses through and through. We're seeing that with the likes of Meta and Google. But we are expecting AI to deepen into other businesses and into consumers' lives. But we're also expecting AI to penetrate into new industries. We already know, for example, we spoke about this week, Alphabet's Waymo, they achieved a massive milestone, 14 million driverless cab rides this year, and they plan to scale up to 1 million robo-taxis a week from next year. Also consider Microsoft. They see AI agents being used in our everyday lives. They see AI agents being used as co-workers coming to a business near you. They see AI robots being used to crunch data, create content, and help businesses with their strategy. And also, Microsoft sees AI being used in healthcare. Microsoft, which is very huge in healthcare, they've got a major division in healthcare. They see AI moving beyond diagnostics and extending into triaging and treating. Now, consider this. Microsoft's AI diagnostic orchestrator has so far been found to solve medical cases with an almost 87% accuracy rate. This is far above the 20% average accuracy rate from current doctors practicing. So that's something to consider. So AI is huge in pinpointing medical accuracy. Microsoft's Copilot and Bing also consider this. They're already answering more than 50 million health questions a day. Now, regardless of what sector or company you look at to think about how AI can change the world as we know it, we've got to consider that most earnings growth in the years ahead are expected to come from those that are benefiting from AI. And this is probably going to remain the case for the next decade. And this is why we're saying, or why I'm saying, some of the best investment returns will probably be AI beneficiaries. So as our behaviors change, many of us are now using AI for therapy. We're ordering driverless cars in the US. Soon you could be ordering a driverless car in the UK or Japan. AI could be used to operate mines across the world. AI could be used to build homes. The bottom line is this: AI is a multi-trillion-dollar freight train, and businesses are going to be spending big to edge out in front of other competitors and to also build a better tomorrow. So let's just break down now. We've set the scene. Let's break down the 3 core AI growth pillars that you need to watch that could drive some of the best investment returns next year and for the next decade. Let's kick off with the chips. So obviously the chips are needed to build it all out. So the chips They go into the data centers. Now, this is the engine of AI. And the second thing we need to think about is think about the software to support AI and data centers and keep AI running 24/7. And of course, we need software and cybersecurity. And the third pillar of AI is, of course, we need metals to actually construct the darn chips, build out the data centers. So we need to dive into the investment opportunities in each investment category. Let's go to the first, of course, semiconductors. Semiconductor companies, computer chip companies, data centers, all of this is the bedrock of AI and is set to benefit from this massive AI boom, right? So Bloomberg Intelligence sees semiconductors as the biggest benefactor of AI explosive spending. So think about semiconductor companies that we speak about a lot. Nvidia, Broadcom, Micron. These companies have got record high free cash flows coming in the door, record high profits, record earnings growth. They cannot keep up with demand. Now, companies want their chips. They're the fastest and most powerful chips in the world. And of course, they need less energy than the other chips that are available in the market. Nvidia, without a doubt, has got the most powerful chips in the world and has got the biggest market share. I'm not just saying this, but Bloomberg Intelligence also says this too. 60% of Nvidia's clients, I speak about this a lot, 60% of their clients are NASDAQ 100 companies like Amazon, Alphabet, Microsoft, Tesla. But Nvidia's market share could fall. No surprise there. They've got the lion's share, but they could move down to a lioness share. Yeah, there's lots of room to spread around, but you've got to think about what we've been speaking about a lot lately. Google parent Alphabet, they're making their own AI chips, right? And they're now selling those chips that they built in-house for their own purposes. They're now selling them to Meta. So the question is, could Google take some of Nvidia's market share? Well, probably, but don't worry, never fear. Nvidia's revenue is growing at an eye-watering pace. Remember, we spoke about Nvidia's revenue growing at 63% year on year. That's expected to continue for the year after. In fact, they're expecting a little bit more than that next year. I'm being conservative. Their profit growth is also expected to continue to grow. We also see the profit growth grow at 60% year on year. There's no other company of this size, that's $1 trillion company, that is seeing these growth rates. That's something for you to consider. But the icing on the cake, this is what I love, free cash flow. Free cash flow is expected to continue to soar. That's something for you to consider. They're expanding in the billions. They actually reported free cash flow of $34 billion. Extraordinary stuff. Other players critical to watch in the chip space are Broadcom, Micron, and Taiwan Semiconductor, as well as AMD. Now, Bloomberg Intelligence sees Nvidia, Broadcom, and Micron as the three top winners next year in the semiconductor space, with positive outlooks for these three companies, thinking that these could gain a lot of business next year. And obviously, when a company gains more business, their earnings grow. And when a company's earnings grow, they usually drive into what we call an earnings upgrade cycle. And this fuels up share price growth. As I always say, earnings growth drives share price growth. So consider watching these three companies. But for beginner investors, I would encourage you to look at ETFs. If you don't want to be a stock picker, no worries. We've got some ETFs for you to consider. Now, why would you invest in ETFs? Well, ETFs give you broad exposure to the semiconductor sector. So a couple to watch here, just calling them out for you. VanEck Semiconductor ETF, SMH is their ticker. That's actually done really well this year. It's up 52%. Another semiconductor ETF to watch, the iShares Semiconductor ETF, socks, like shoes and socks. It's up 44% this year. Now, these ETFs are a great example of how you can get broad exposure to the global semiconductor market, touted to see the most growth from an AI spending boom, that $1 trillion spending boom. Now, the investment, the ETF, will give you diversified exposure, not just to semiconductor leaders, but also those who also offer other semiconductors as well. So they're creating the AI chips. We've spoken about Nvidia and Broadcom. But the companies like TSMC are also in these ETFs as well. Now, TSMC, for those that don't know, this is the world's largest foundry. They actually make the goods and the chattels, the chips that these companies are selling. So that is something for you to consider. That stock is in this ETF as well. And of course, in these ETFs, have got the companies that are making the memory and the data storage boards that go into all this infrastructure. So think about Micron. Micron is a company that's in these ETFs as well. So let's move to the next thing for you to consider, and that is data centers. We also call these cloud companies. Now, these are companies that we all know and speak about on a daily basis. Who are cloud companies? Well, you've got Amazon's web services, Microsoft's Azure as well. Now, these are the two world's biggest leaders in this space, and estimates suggest data center spending could surge right through until 2028 and then stop growing. Consider that. This is why you need to review your investments every quarter. If you're not doing that, I don't know what the hell you're doing. Also consider until 2028, Bloomberg Intelligence sees data center revenue growing at 50% per annum. 50% per annum, that's extraordinary. Microsoft's Azure AI services alone, that could jump to $21 billion in sales next year. That's almost triple what it's done over the past couple of years. Now, Microsoft's total revenue, think about everything, how they earn their revenue from a lot of things. Of course, total revenue expected to hit $80.3 billion next year. All right, we've covered a lot in the data center space. What about ETFs? So good question. I'll answer that one again. So ETFs for you to consider in cloud computing, there's a couple. The Global X Cloud Computing ETF, CLOU is the ticker, and the Global X Data Center and Digital Infrastructure ETF, DTCR is that ticker. Just two examples of ETFs that give you access to companies that are actually building the data centers. They're building the cooling systems and the servers required to all support this ecosystem. Now let's move on. Let's move on to the second pillar of AI, the software to support the hardware. So let's think about the operating systems. The operating systems, as well as generative AI services, and of course, cybersecurity needed to back all this up and keep all our data, yours and mine, safe and secure. So software AI spending is expected to grow at a 71% compound annual growth rate up until 2033 and hit $318 billion. So again, another thing to think about is I'm mentioning 2033. You've got to think about this is not a set and forget investment, but that's why we're saying this is probably going to be this core theme, one of the biggest investment opportunities of our generation. Back to cybersecurity. Cybersecurity is, of course, deeply embedded in AI systems, and cybersecurity is actually a part of most governments' defense spending. So that's another catalyst for you to think about why you should be watching cybersecurity stocks. Now, let's think about the leader in cybersecurity. That's CrowdStrike, the biggest benefactor of cybersecurity spending. Why is it the biggest? Well, simply by scale. It's got a lot of global clients, and it's been able to grow their revenue considerably because they're gaining more market share, edging out other competitors, and that's why their revenue is growing at about 23%. That's as at the last read. Revenue is also expected to continue to grow at a similar tune for the year ahead up until $1.3 billion. How many clients do you have? Great question. 29,000. So they've got global governments on their books, large scale businesses, and this is why the company's earnings are growing and their stock has actually done really well this year. It's up about 50%. And this morning we saw several brokers come out and reiterate the stock as a buy. One of those it got an upgrade from was Freedom Brokers. We also saw BMO and Scotiabank reiterating CrowdStrike as a buy. Let's step back on the broader software front and think about how you could get exposure to the theme of software to support AI. So there's many ways to skin a cat.
But the ETFs that you could consider are the AI Next Gen Software ETF. It goes by the ticker of IGPT. That's focused on leading AI stocks, including, of course, the Mag 7. And that ETF has done really well this year. It's up about 31%. You've also got the more specialist beta shares global security ETF, HACK. HACK is that ticker code. But if you want to focus on single software stocks that benefit from AI, of course, there's plenty to consider. You've got Microsoft. Why would you consider Microsoft? Well, it's got the Copilot AI assistant that's integrated into their applications. And Microsoft, remember, holds about almost a 30% stake of OpenAI. Remember, OpenAI is what operates ChatGPT. That's aside from Microsoft that is benefiting from the booming Azure cloud business. And then also in the software space, let's think about Meta. Meta is integrating AI heavily across their social media businesses such as Facebook, Instagram, WhatsApp. They also create AI customer service agents for their commercial clients as well. So they're benefiting from that and growing their revenue on the back of that. And Meta is also selling proprietary AI models to their to the corporate world as well. And just rounding it out in the software space, we've of course spoken about Amazon's business, but they're Amazon's web service, or AWS, that's got a full suite of AI services that are being used by developers and also enterprises as well. Earlier this year, of note, rounding it all out, all three of these companies inked long-term energy supply deals to buy uranium, to power their data centers, and to keep their software up and running. And this brings me to the third pillar of AI. Of course, we need resources to build all this critical infrastructure and energy to keep the power on 24/7. So this is the standout theme, or I guess takeaway from the need to think about resources. Uranium. Uranium demand continues to surge to unprecedented levels, and countries are pushing nuclear power as the cheapest and cleanest alternative to other energy sources. It's been touted as the key to keep AI infrastructure on 24/7. It's not just me saying this, but many research firms have been saying this, such as Mitch and also Dow Jones Indices as well, S&P Dow Jones Indices research team. Tech giants, just reiterating this again, Microsoft, Google, Amazon, they all have individual targets to actually lower their carbon footprint. And that's exactly why they specifically went out and inked deals to buy uranium straight from companies that are producing uranium and pumping it into the grid. So they inked deals all with Constellation Energy earlier this year. And this is why, all in all, you can expect a lot more hot sauce to go into the uranium theme. AI data center demand, speaking about this hot sauce theme, AI data center demand is on track to grow more than 160% by 2030, up from 2023. And data centers and AI demand are expected to account for up to almost 10% of global energy needs by 2030. So this is exactly why you should be considering the Global X Uranium ETF, URA. This is the biggest uranium ETF in the world, and it's actually done pretty well this year. It's had a bouncy run, but it's up about 82%. So that's an ETF for you to watch. But a standout company is, of course, Constellation Energy. Their shares are up 67% this year. It's a $118 billion US company, and it supplies most of the US's needs in terms of green energy, powering directly to the grid. So that is something for you to consider. In fact, it supplies 30% of the clean energy needs in the US straight to the grid. All right, so AI is the transformative megatrend, perhaps maybe of the next decade. you could argue, of the century. Whatever you think, I do believe that this is the biggest investing opportunity of our generation. That's something that I continue to reiterate. But it's not going to be a straight line up. It doesn't mean it's a set and forget investment. And that's something that I've really reinforced today. This is not going to be a set and forget investment, but I do believe this should be garnering some of your attention. Now, it's expected to benefit the most from revenue spending. So you should be considering adding exposure into your portfolio. Chips, consider potentially data centers and energy and software needed to build all this out. These companies, these sectors are going to be changing the world as we know it. And this is where the most revenue, profit, cash flow growth is expected to come from. So these are the biggest AI beneficiaries. But as always, you really need to think about your own strategy, your own risk tolerance as well. Rounding it all out, let's just reiterate some of the stocks that we've covered and some stocks that I think you should be watching. Nvidia, Google, TSMC, Microsoft, Constellation Energy for powering the energy needs of the next generation, CrowdStrike for cybersecurity, and for investors who want a really simple, diversified approach without stock-specific picking, you should be considering the Global X Artificial Intelligence ETF AIQ, or there's also the Robo Global Artificial Intelligence ETF THNQ, and last but not least, another ETF for you to consider, Roundhill Generative AI Tech ETF. All of those 3 ETFs, they're up about 30% year to date. Plenty to watch and consider. Stay safe. Happy trading. Have a great weekend.